If I told you there's a way to become a millionaire without working overtime, without chasing risky investments, and without trying to time the market, would you believe me? Because there is. And it's not a get rich quick scheme. It's one of the oldest, most powerful forces in the financial world: compounding interest. This is the secret weapon the wealthy have quietly used for centuries to build unstoppable momentum with their money. In fact, Albert Einstein once called compounding interest the eighth wonder of the world. He said those who understand it earn it, and those who don't pay it. In this video, I'm going to break down exactly what compounding interest is, how it works, how it builds wealth silently in the background, how it can work against you if you're not careful, and most importantly, how to harness it like the wealthy do. We'll dive deep into real-world examples, compare different financial paths, talk about what most people get wrong, and I'll introduce you to a strategy called infinite banking that turns compounding interest into a superpower. So buckle up and stay with me, because if you grasp what I'm about to show you, your entire financial future could change. Let's start with the compounding interest actually is. At its core, it's simple. When your money earns interest, and then that interest itself earns interest, the snowball starts rolling. Over time, your money grows at an accelerating rate, not just in a straight line, but exponentially. Think about it like planting a tree in the beginning. It's small and slow to grow, but every year it gets taller, stronger, and produces more fruit. Eventually, you're sitting in the shade of a tree that's feeding you without you lifting a finger. Let's say you invest $1,000 at 10% interest. After year one, you've got $1,100. Year two, $1,210. And year three, $1,331. And it just keeps growing from there. After 10 years, you've got $2,593. After 20, $6,727. And after 30 years, $17,449 without ever adding another dime. But what happens when you keep investing $1,000 every year for 30 years at 10%? Now you're sitting on over $180,000. That's the power of compounding. It multiplies your efforts. Now, let's take this a level deeper. The key to compounding is not interest, it's time. Time is the real MVP. The earlier you start, the more powerful the results. Let me introduce you to two fictional people, Sarah and Mike. Sarah starts investing at age 20. She invests $5,000 a year for just 10 years, and then stops. She invested $50,000 total. Mike waits until he's 30 to start, then invests $5,000 a year for the next 30 years. He puts in $150,000 total, 3 times what Sarah did. But guess what? By age 60, Sarah has more money than Mike. Why? Because her money had more time to compound. She's got the snowball rolling earlier. That's why compounding interest punishes procrastination and rewards patience. Every year you delay, you're missing out on what's known as the compound curve, where growth starts to accelerate beyond anything you could earn from hard work alone. Here's where most people go wrong. They underestimate the curve. They invest for a few years, don't see big results, and give up. They pull their money out of the market during downturns, or worse, they don't invest at all and leave their money sitting in a savings account earning 0.1% interest. That's not even keeping up with inflation. That's losing money in slow motion. Meanwhile, the banks are using your deposits to lend money out, earn interest, and compound their own profits. They pay you pennies and use your money to earn dollars. So let me ask you, why not flip the script? Why not become the bank? Now let's talk about the dark side of compounding. Yes, it's powerful, but it works both ways. When you owe money, interest compounds against you. This is how credit card companies get rich. Let's say you owe $10,000 on a card at 20% interest. If you make a minimum payments, you'll be paying that off for decades and could end up repaying $25,000 or more. That's compounding interest working against you. And it's not just credit cards. Student loans, personal loans, payday loans, they're designed to keep you in a cycle of debt. The system is rigged for lenders, not borrowers. But if you understand how to flip compounding to your advantage, everything changes. Which brings us to the most powerful wealth strategies you'll ever hear about in traditional financial education: infinite banking. This concept is all about creating your own privatized banking system, where you become the one controlling the capital, the interest, and the terms. The tool behind it? A specially designed, high cash value whole life insurance policy from a mutual company. This isn't your grandma's life insurance. This is structured for growth, liquidity, and long term wealth, not for death benefit. When you pay premiums into this policy, the cash value inside grows guaranteed every year. And many policies also pay tax free dividends. But here's the magic: you can borrow against your cash value while it continues to grow as if the money never left. That's uninterrupted compounding, the holy grail of financial freedom. Imagine this: you fund your policy for a few years, then borrow $20,000 to start a business, invest in real estate, or consolidate high interest debt. Meanwhile, your full cash value is still compounding quietly in the background. You're not draining your assets, you're leveraging them. This is what banks do every day. They lend against their reserves, earn interest on loans, and keep growing. With infinite banking, you can do the same. And because it's private, off Wall Street, and tax advantaged, you stay in control no matter what's happening in the market or economy. Let's go even further. When you use infinite banking over time, your policy becomes a personal financial warehouse. You can fund major life events, cars, college, real estate, emergencies, even retirement, all through your own system. Every dollar you use gets recycled through your banking system, building long-term wealth without interrupting the compounding engine. This creates a snowball effect that gets bigger and faster every year. And because you're borrowing against your policy instead of withdrawing from it, the growth never stops. This is how families build generational wealth, quietly, securely, and with full control. Now, none of this happens overnight. Just like compounding strategy, it starts slowly in the beginning. It might not look impressive, but give it time and the numbers become jaw-dropping. This is why the wealthy don't chase flashy investments. They build systems that compound over decades. Warren Buffett, one of the richest men on earth, made 99% of his wealth after his 50th birthday. Not because of a lucky break, but because he understood and trusted the process of compounding. You can do the same, but you have to start now. So here's the real question: are you going to let compounding interest work against you, or start using it to build real freedom? Because the difference between someone who retires broke and someone who retires wealthy often comes down to when they understood this principle. If you're ready to build wealth the smart way, you're in the right place. This channel is all about empowering you to become your own bank. Take control of your financial life and master the tools that school never taught us. We break down infinite banking, Austrian economics, and real wealth strategies that help you opt out of the broken financial system. So if this video opens your eyes, do me a favor. Hit like, tap subscribe, and keep learning with me. Because this journey doesn't end here. This is just the beginning. You have the power to change your entire financial future. Not with luck, not with gimmicks, but with knowledge, strategy, and the magic of compounding. Thanks for watching the Privatized Banking Project. I'll see you in the next one.